Hey, what's up guys, I'm Michael here. In today's video I will be talking about the scalping strategy and basically my approach to analyze the charts and where to look for the particular trades. So I will be talking about the Euro USD current situation on the market and how I approach to analyzing the charts. So we will go down from the higher time frames like weekly to daily and eventually to a 30 minutes time frame, and we will be talking about where to look for the entries and how to approach the charts. So we will start from the client's cabinet. Let's choose the Euro USD currency pair and let's check what we have, what is going on the chart starting from the weekly time frame. Yeah, the platform do not want to cooperate with me at all. So as we see on the chart, we are currently in a downtrend. We were starting it from this moment, and right here, we are consolidating on those previous levels. So let's zoom in a little bit and see what we have what is the current situation. So we have the previous high was not broken. Eventually we tried it twice and we failed. So right now we are currently on this very strong consolidation. So you see how many indecision candles there were right here. We have a couple of dojis, even the big candles with big bodies, and that suggests the indecision in the market. Right here we had also very strong resistance right here, very strong support right here, which we are currently on. And let's check the left side of the chart. We have the nearest lowest point, the nearest highest point, and right after that we made a higher low and lower highs, which means that we are currently starting to making tighter range, something like that. So we are starting to form some kind of a wedge or triangle or something like that. I think it is more likely a wedge because it is a very long period of time while this formation is forming. So this is the weekly time frame. Therefore, if we are on this moment, we should look for at least we shouldn't look for sell entries because this is a very strong support. Therefore, it would be not welcomed to look for shorts after such a steep downward movement and being on very strong support level. So let's go down to the lower time frame and see that more clearly. Okay, so right now we are seeing this good. So let's mark it with this tool. Okay, as you can see, from this moment we are consolidating, and therefore we tried once, failed. From this moment we picked up again and failed. We didn't even reach the highest point from the previous rally. So right now we are again on this current level, and the fundamental background was that the inflation. Today we had the CPI reading from the United States, which is the inflation data from the United States, and currently the inflation in US is on a record highs, the 13 years record highs. Therefore, it would suggest that if it will be running still high, it would suggest that it will not be as temporary as the Fed says. Therefore, it would mean that the interest rates hike and the tapering of the asset purchasing programs would come sooner than expected. Therefore, the US dollar should be strengthening, but as we see, the reading was not, it was even lower than the consensus. And also what would suggest that the reading would be stronger. First thing is that we were receiving informations that the COVID is starting to spreading in Asia, therefore causing the disruptions in supply chains. And as for this forecast for the previous 6 months, the consensus was hardly right. Even from March we see that it was higher reading. Here we see that the how it differ from the forecast. So that is the first thing. Also we see that okay, it was a little bit worse than consensus, meaning that maybe Fed is right and the inflation will be temporary. And as you can see, the euro started to strengthen a little bit. Now those charts are awful. Okay, you see that the euro started to strengthen. Also, the second thing that I am using to determine what is going on the charts and which currency could be stronger than the other one is the tool that you have available on MetaTrader 4 platform. It is not available here on the web terminal, either on MetaTrader 5. It is available only on MetaTrader 4 in LiteFinance, which is the dollar index and other major currencies indexes. So let's go to the MetaTrader 4 platform. Here we have the euro currency index and okay, but first, where you should look for them. On the left side, you have your market watch with all your assets available to trade. You need to click on the right mouse button, show all, and it will show you all the assets available to trade, and also those indexes like currency indexes, which shows you the strength of a particular currency against 6 major currencies. So for example, in the basket of which is measured the strength of the dollar, in the currency that is measured against is a euro, a British pound, Japanese yen, Swiss franc, Swedish crown, and Canadian dollar. Okay, that is 6. So for example, against those two currencies it is measured, and therefore we could also analyze it. What is the trend on the currently trend on US dollar, etc., etc. So in this situation right here, we see clearly, this is a daily time frame, that the US dollar was strengthening from a couple of months, and we made high here, higher high here. Therefore, it was also the second approach to break through this resistance level. Therefore, it could suggest that with the third attempt, because the more times the one support or resistance is tested, the weaker it is. So therefore, I was thinking that we were trying to test it the third time. It was the third approach. Therefore, it was suggesting that we could, concerning the whole background, we could break it through. Also, if you check the euro index, it is like the opposite to the US dollar. As you can see, it was falling from a couple of months. The trend was downward, but right here we were on the strong support level, and if we would breach that support level either on the euro or the dollar, it would suggest that the current trend will strengthen. So let's go back to the euro USD, and therefore, so what we know now after the data is that in the current situation, it was good for us that we didn't take any trade, any trade for the short, because that was all the context around it. We didn't take any trade because the euro strengthened, and the moment where we will be looking for entry is when we will break through. Sorry, let me check. Let me change those charts again. I will cut this part, so don't worry. Okay, so I corrected the support zone, and therefore what we are looking for right now. So if we had made a move like this, we will go and switch to the lower time frame, and after that we would have to look for a breaking through move, and therefore the retest. So that is breaking through and retest for this particular zone, either to the downside or to the upside. So if the situation is like this, we broken through to the upside, I would wait next for a move like this, where we would go up, retest the level, and right here, if we would see some kind of a candlestick chart pattern, I would be entering the market. So we are on the 1 hour time frame. We can even go lower and look it on the 30 minutes time frame. So what is the key thing is that we need to look for the, maybe let's mark it with a text, retest candlestick chart pattern and going to the upside. And of course, what I would be looking at is to set the, no, this would not work, set the risk reward 3, 2, 1, and which means I will be setting the risk 1, 2, 3 because I will be risking, for example, 1% of my account in order to obtain 3% gain, 3% profit. So I will the second part. So the second part of the video will be about the current situation, if we will receive such a scenario, or to the other side, because as you can see, the market is still reacting to the current situation. So either we could go also and break through to the downside of this support level. The second part will be about the current situation, or if it will not happen, and if, for example, the price will be consolidating right here, I will do another example from the previous days, previous weeks. So that will be end of the part 1. Okay, guys, so we are day after the CPI data release and from the United States. So let's check the Euro USD chart and let's see how does it look. Let's make it full screen, and right now it is H4 time frame. So we see it is forming some kind of a flag, or kind of a wedge, but it is not clear where they want to go. If we go on lower time frames even, we will see that it might be some kind of a flag, or we have some kind of a double top. If we draw those lines like that, we will see, maybe not ideally, but we can have some kind of double top, and it is a matter of which way we will broke those support and resistance. So right now it would be hard for me to explain where to look for the best scalping opportunities. So we will just go back with time and see in the chart, in the Euro USD chart, where we would have a better option to, you know, check for the scalping opportunity. So let's switch to the higher time frame, maybe D1, and let's maybe not look so far away. Yeah, if we draw this line, it even looks a little bit different. So okay, but let's leave it for now. Maybe let's check this moment, but for that I think I will have to switch to trading view, because in the web terminal right here I will not have as much data available. Yes, that's what I thought. Okay, so I have the trading view right now, and let's go back in time and check the place we want. So maybe let's switch for 4-hour time frame chart. Let's mark this place with a trending line and a rectangle. Jeez. Okay, and let's go lower in time frames for 1-hour time frame. So let's rewind that. Okay, so what do we have here, guys? The thing is, now let's delete all the drawings. The thing is that what we are looking for is a direct signal that the trend is changing, and therefore we will be looking for scalping along with the trend. So this is the moment where we had this strong support level, which we are currently right now in the present situation, but we rewind that to that moment, and what we see right now. So first thing, we have some kind of a double bottom right now. So this is the first sign of This is the first sign of a reversal, possible reversal right here. And the second thing is that what we see clearly a reversed head and shoulders, right? So we have, where is the brush tool? So we have clearly here one shoulder, head, the second shoulder, and here we have the neckline. So first thing, what we can do if we would be right here at this moment, we would be looking at to enter on the neckline. So first thing is that we could place a trade, a long position, a limit order somewhere over here. What I have on mean is that first we have determined the direction of the trend right now, and what we will be looking at right now are pullbacks. So what we are looking at those pullbacks is a couple of things. First thing is that candlestick chart patterns after a pullback. That's the first thing that we will be looking for. The second thing are we will be using Fibonacci extension to determine how big was the retracement, how big was the correction to the move. So first thing that we have here, when we broke the neckline, is that we have the chart pattern called three crows. Maybe let's zoom it in a bit. Three crows. These are the three consecutive like stairs looking candlestick chart pattern. So this is the first one that we could enter for the long. Oops, maybe let's mark it somehow with the rectangle. So that's for us the first sign. The second sign, we have here some kind of a flag, but the candles are very small and a lot of them are hammers, hanging mans, dojis, so it would be difficult. And I would be, for example, going in when we have this, I call it a swing candlestick chart pattern, when there is some kind of a hook formed when we have this candle which is the lowest, and the candle that almost engulfs the other two. So that would be of course for me a bad option, because I would be stopped out somewhere over here. But when we see, okay, so let's imagine that we are currently in this situation. What we are thinking, okay, we have this big candle, so what we can do right now is to, of course, measure the movement, because we would need to know right now, okay, is it a reversal of the current trend, or it will continue and this is just a correction? So what is the better tool than the Fibonacci retracement tool? Sorry, I need to find that. Fibonacci retracement. And what we are measuring, the whole move, the whole, we can say, wave. So from here, sorry guys, let's delete that and do it again. So we are measuring this whole move to the notch, and what we see, it is not even fully the 50% of the correction. So what we would be doing right here, we would wait either to break out this level, and that would suggest us that this reversal might be a little bit stronger and we could consolidate further here, or wait just for some kind of a sign of the some kind of a candlestick chart pattern or something else that will suggest us that the trend will resume. So we would wait until here, and we will have three white soldiers candlestick chart pattern, and we would enter at the reversal around half of the whole formation. So we would not enter any here or here, because the three white soldiers, I made also a video on that. So these are the three consecutive green candles, very strong with big bodies. This one is the least, matters the least, but the first one needs to be with a very, very big body, with very wide body and small notches, small shadows. So that would suggest us, and the perfect entry for that is to enter more or less in half of the formation. So we would be entering somewhere over here, right? That would be more or less our entry. So we would wait. Again, we have the pattern but not here. No, this is not the 3-eyes order. So again, we would have the pattern confirmation here, and yeah, we would be still in the position, because when we are entering here in the more or less in the half of the whole formation, our stop loss is below the formation, so it would be somewhere over here. So more or less that would be our entry, and as you see, we would be still in this bigger position while scalping the market along the way with the techniques that you can learn on this channel watching the previous videos. So more or less that's the idea, that we need to determine where we are on the from the higher time frames and go lower to determine how strong is the support, to determine the reversal point. And of course, we can again check the MetaTrader 4 and the currency indexes. So for example, you can see the euro currency index right here. That's the moment that I was analyzing a second ago, and of course it is mimicked in the USD index. You can see it is that moment. It's the first. Yeah, it's the 1st or the 2nd of April, along with the euro. Yes, 1st and 2nd of the April. And if we go back through to the chart, so as you can see, that's the moment. So that would signal us the moment where the resistance is very strong, either on the currency pair chart and also on the currency indexes chart that measures the strength of a currency against the basket of 6 other currencies. So with that, we could determine the place where the resistance is very strong, and if it will reverse very heavily, as it did in this example. Right, so if we go for the daily, we will see how strong this bounce was. So yeah, that is all for this video, guys. I hope you enjoyed and learned something. It is purely without any, this is an analysis purely without any indicators, oscillators. I just used the Fibo tool and more to just, you know, see the numbers, not measure it with my eye, and have it confirmed with the real numbers, the retracement with the real numbers. So thank you for watching. Don't forget to check LiteFinance Instagram and TikTok account, because I am also posting stuff over there too. And if you like this one, just subscribe for more. Thank you. Bye.